You're muted. So if we talk about this second half of the year, then this new SMT line, which was operational from 1st to November, played a vital role, crucial role in catering our increased demand from the existing as well as new orders for last financial year. And the wholly owned subsidiary that we started, the business flow from there also has been initiated. And down the line, this year also we are eyeing on that particular because of this tariff situation. India is on the hotspot now, and because of that, as of now also this like as an alternative to China or China plus one strategy, we already closed on three key projects, that is from concept. So we are going to develop a product for them, which they were getting it done somewhere around the world, and now they're looking out for the alternative source. So we did agreements with them where like product will be developed from scratch, and probably like next 3 years down the line, that two, three projects are going to contribute around about 5 million USD for our AIMTRON India. And they contribute more on IoT and industrial IoT and power electronics as a sector. And to what we stated in terms of new industries, telecom, we already entered now. Automotive, we closed on one big order for mass manufacturing specific to electric vehicles. And aerospace and defense is something that what we committed for AI in first half of the year, that we are expecting 1.8 million order. So we already received that order and now it's under execution. And to what strategy we discussed on before, like in like first half and last year, that certainly box build contribution is slowly and gradually going to increase. So that is also getting reflected in last year's result.
So to addition to SNES, we have a very good benefit. We actually for AIMTRON is a golden time. It's not. We don't want to say tariff is good or bad. I'm not, talking about a politician way, but we both, in both world, US and India, we have a very solid infrastructure. So currently we are seeing lots of activities in RFQs. Current RFQ pipeline itself about 80 to 90 million dollar means around 800 to 900 crore rupees. On that much the new RFQ pipeline is flowing through right now, and everybody like a huge contract, like a huge customers. Those customers they don't want to go to China, they don't want to go direct India. They want us to Indian, price Indian way, but they want ship from Chicago. So that is the benefit we have, and we are banking on that, and I think it's a very good opportunity we have at this point. Those three contract we have, all three is one is from electrical, electronic, power cabinet type of customers, and it's almost we started development for them already. We got the first PO, and we started tooling. There is second one drone customer. We had last time we showed you that is already in a first phase of beta version. And on the third customer is also in a sensor. So all three customers almost 10 million each, in a 3-year span. So almost 300 crore worth of business we are talking in 3-year span just for new initiative from ESDM initiative. That's what we can use a little bit more, a better balanced margin and markup. So I think that's a benefit we have in the tariff side. A lot of customers, asking us to use our India infrastructure to avoid, to mitigate the tariff. So we've been proactively working with our customers. All AIMTRON electronics customer in US and North America, we are proactively working with them and finding a solution, giving them a solution. One of the customer, they came to us also. Once they are bringing the whole cabinet from China, but they want to build us the cabinet from here. It's a whole slot cabinet they want to build from us in India. So they are coming next month and see the facility and approve this. So that's the process going on right now. So we have a lot of a good way of balancing the tariff situation. Now the fully loaded, questions and excitement. So maybe Nikita, you want to take the lead, and or Viral, whoever wants to take the lead and share the result, please. Nikita, you there? Nikita?
Yes, yes.
Okay, good. Continue, yeah.
Okay. So my screen is visible?
Yes. Not your Sneha by Sneha. Yeah, continue.
Nikita, you can speak from the existing screen itself.
Okay, Nikita started. Okay, good. So she wants to show her results, so that's why she can. So a lot of questions we can solve. Okay, Nikita, continue. Yeah.
Okay. So for the 31st March 2025, we have achieved 158 CR total revenue from the operations. Total expenses were 129 and which stood at the PBT at 3212 lakhs for the financial year 31st 2025. And the PAT was 2573 in lakhs. So which is the 16% of the total turnover.
So maybe Sneha, we can start the questions over here first, and while this balance sheet is open, so we can start that way. So because we can, that's the anxieties we have, everybody, so we can use that one first. Okay, let's. Anything you want to conclude first before we go on a question answer, Vinayji?
No, I think so. Let's move to Q&A.
Thank you, everyone. Really excited to see you. Also, we have a in-person meet tomorrow, and most welcome in the last minute. Also, if you want to see me and Nirmal both, in person, we'll be there to answer any more questions tomorrow. But let's start this question now. Vinayji, have your team moderate, please.
Thank you. We can stop the presentation. All those who wish to ask a question may use the option of raise hand, and we'll invite you to ask your questions. We'll take the first question from Agastya Dave. Agastya, you can go ahead, please.
Am I audible, Vinay bhai?
Yes.
Thank you very much for the opportunity. Mukeshji, congratulations on excellent numbers. Sir, first of all, I have a couple of suggestions. One is if you can also provide going forward a YOY number for the same period, whether it is quarter on quarter or half year on half year, just to see the seasonality effect if there is any. That would be just a small thing. So second is I would also request you, if at all possible, if you can start giving quarterly numbers on your own. I know SEBI regulations are different, but 6 months in such a volatile period, because here the government policy in US and also in India, it changes on a dime within few days. So 6 months is such a long time, not hearing anything from the company on the performance side. If you could give quarterly numbers or quarterly commentary, that would be of great help to all of us. Please do it voluntarily. I'm sure you will become a very large company one day. It's better to start inculcating all those good practices right now. So moving on to the questions, one is a follow-up on what you mentioned in your opening remarks, that there are a number of class reclassifications in the numbers. Sir, if you can take us through those, because when I look at the balance sheet and the P&L, a lot of the line items have moved completely out of whack, and a lot of them are not making sense. So I'll list down what I couldn't make sense of. One was the employee cost reducing, even though your turnover has increased so much. The gross margins, 23, you were at 34. Last year, you were at 38. Now, this year in FY 25, you have moved to 27. Then other expenses also, there is quite a dramatic decline there. Again, I'm talking about annual numbers here. And in the balance sheet also, I see a large jump in payables and receivables. So even though your net working capital seems to be under control, no problems there. But the gross numbers, they have moved dramatically out of whack. So how much of this is accounting? How much of this is probably product mix or new customers or some extraordinary circumstances or delayed payments or any problems as such? because there is very little information available, I don't have the right question to ask you. So it's a very like a motherhood statement and a very broad question. If you can take us through that, that would be of great help. And so another suggestion, if you have done a lot of accounting reclassifications, kindly come out with a simple press statement saying what these are and what are the adjustments. So like to like comparison अगर हमको मिल सके for the year and for the half years, just to compare so that we know in which direction we are going. So as we are scaling up, for example, what will happen to the fixed cost? Today I cannot make head or tail of what is going to happen to the cost structure as we move forward. So that is the first large question. And the second smaller question is, you have given a guidance of 40 to 50% CAGR going forward, but you have also announced a large order today. And the commentary that Sneh bhai just took us through, there are a lot of additions that you have done, right? In products and capabilities, and also the landscape has changed, as you were mentioning. So how do you see the next couple of years panning out? Are you going to increase your guidance? Is the visibility better for you in terms of tangible growth, which can happen in a very short to medium term, as in the next couple of years? So these are the two very broad questions. Thank you very much, sir.
Really appreciate Agastya ji. It's a very, very good, questions. Really appreciate your request also. AIMTRON is a kind of a journey, is that correct? So we never thought about going public, and we started public, and now we are public. So we are, now developing along the way, right people at right place. So last time we announced that we hire advisory board. So we have a now advisory board. So after advisory board, one of our, CA, Mr. Divekant Zaveri, he suggested that our, financials should be reflect what we are doing on the floor, which was learning curve for us. And so that's why, we had a last minute, lot of changes yesterday. After, even board meeting, we had some changes. But first, one example, I think you see employee cost. Nikita will give you every single answer. We have all answers for you. So that's something I would like to just, give you that the way we, put it, the new financial is a little different, and it was the last moment. And also we are excited to give the result a little early. We could have taken 1 week extra and then do everything and then put it together. But yes, your comments is really appreciable. And next time, I think we should give, actually Vinay also suggested that we should give some small press release also, where you make some changes in a standard format. So we should do that. So definitely we will go from there. Regarding this, market culture type of American quality type of people. So telling right now 100% growth versus, current situation, current tariff situation. But yes, we are planning to big, but maybe Sneh can give that first answer, and Nikita can take it for second answer. So Sneh, you want to take the first answer from Agastya ji?
Sure, I think Agastya, very well question. And to add on to what Mukesh stated, like has been evolving phase, there are heads that has been changed in the like balance sheet. Just to give you an example, like initially like salary and wages were together, but now say like just an example to add on to that, salary and employment and wages are part of COGS. So that is how like things have changed as of now. So what we did last year was like from private limited to limited, it was first experience for us. Now Divyakant as a part of advisory board today, unfortunately due to some urgency could not be part of today's meeting. But then now based on his experience, he has been working with like all tier one companies and to what we are eyeing at in next 3 years is main board 2 years now. 1 year is already done. So that main board journey. So considering that like quarterly results and all that, we are already eyeing on that front. As of now, it's too early to say something on that. But that is the prime reason that structures and heads have changed. Like rest all are in line, nothing to worry on that front. And to what business aspects we are discussing on, probably that 40-50% this year also see, if you see it's a 74% year-on-year increase. To what we are eyeing at next year is probably you can say more than 270, 280, more than that for next like this current financial year. And to what open order book we have, I think we are confident enough that we'll be surpassing that 270, 280 plus as a number.
Understood. That's a healthy acceleration. And
Nikita, one
if there are
question,
no,
Nikita.
if there are a lot of changes, as you mentioned, you have moved part of the employee cost to COGS. So that's a very strange choice, but I'm pretty sure you have a good reason for that. So then we definitely require like-to-like comparisons and also a press release describing what all has changed. So that we can have a good idea, because then it seems that the gross margins are not comparable. And I should not be then worried why the gross margins have dropped so much. So that's not a valid question. Again, I do not know what is the impact. So if you can just provide all the changes that you have done in a press release so that everyone can understand what exactly happened, that would be of great help. But if you can briefly take us through all these changes, we will appreciate it. I'm done from my side. I'll go back in the queue. Thank you very much. Thank you.
Yes, we will definitely put a press release within a short time, and we'll share it to everyone. I think, as Sneh gave one example, there is so many examples. Like after new SMT lines, our production went from 3 times more than we used to do 200 watts. Now we are doing 600 watts in same line. So it's impact on revenue increase and lower employee cost also. So there is two ways you can lower the cost also. I think there is so many ways we can explain, and we will put all these numbers in a right direction, in a right format, and we'll
So
still put it together.
so then a very simple thing, whenever you come out with a press release, I hope it is done as soon as possible. But if I look at the PAT percentage, right, the PAT margin, that should not be changing at all, right? There could be some changes in EBITDA percentage also, but PAT percentage should not change. And you guys
Yeah.
have reported around 16 and 16.1%. So that number, is that sustainable? And the EBITDA margins that we have seen this time in this half, so you are at 19%. So is that sustainable? And is that comparable to the 25% that you were doing earlier? Was there any pressure on the costs or product mix which led to lowering of EBITDA on a comparable basis?
So I think the PAT is going to be sustainable for sure.
Okay.
I'm pretty sure. EBITDA is all of EBITDA will be changed, as you said, because we're going to have more automation, more AI-based, more things. So it will save some costs also. Regarding your overall, the current market scenario, we also, when we said first time, will be there around 16 plus minus 2 to 3%. That's what we said also. What
Okay.
happened, let's see, in this quarter or this half years, we have a lot of a different segment of business. Let's say, one segment called defense, and we have a defense segment, we have a higher margin. So at that time, what happens, that defense margin in that half year or that quarter will give you a better, EBITDA, better margin. Versus next year, let's see, this quarter, maybe we have a very heavy in telecommunication or automotive, so it gives you a lower margin. So if you look at year over year, I think that's the best option for EMS. But I know you have, and we are committed to give, once you go mainboard, anyway, we have to go that quarter over quarter. But definitely take your suggestion very, very seriously, and we'll definitely make it happen, next time. And next time before we, publish the result, we'll take one extra day and make sure, we have a press release and everything all together. If any
Okay.
changes,
Thank you.
there will be
Thank
some
you, sir.
changes every year because we are still in a SME phase and we are still learning phase. But until we go
Sure.
main board, you will see some more changes and some more, learning curve. So
Sure,
continue.
sir. Thank you. Thank you. You have given
Agastya, on a
me enough
lighter
time.
note, I thought you would appreciate us sharing the results before on time than what everyone expected.
No,
Just kidding.
definitely. I appreciate any company which doesn't report the report on the last day. There will be at least 2,500 jokers who will report on the very last day. So I appreciate that. I also appreciate the progress that you guys are making. And thank you for giving me time. I've taken too much time. I apologize to everyone. I've taken too much time. So thank you very
Thank
much.
you.
All the best.
Thank you. We'll move to the next participant, Sridhar Jadhav. You can go ahead, please.
Hello, good evening, sir. Congrats on a good set of numbers. Sir, I agree with Agastya what he mentioned, but just still on a broad basis, till EBITDA, even if I look from an H1 to H2 basis, I can still see a stark 6% drop in margins. So would So just wanted some clarification on that front, because below EBITDA, the numbers are not very significant if I see finance, depreciation, other income, etc.
Sneh, you want to take?
Sure. So if you certainly see, like Mukesh already clarified on that front, that it is going to be mix and match in terms of sectors when we are eyeing on scalability. So now next year, just an example, when we are eyeing to from 158 to when we are eyeing to go to 270, 280 plus, and at that phase of time, particularly if you see, then there is going to be mix and match on that front. That some may be on a lower margin, some may be on higher margin. So it's better if we go on quarter to quarter, like first half of the year versus second half of the year and the full year comparison. Because if you see the year on year comparison, the PAT has been almost double. If you compare on year basis in terms of value, that has grown by 100%. Revenue has grown by 74%. So if you see on that front growth, we are on that growth trajectory. But yes, if you talk about sustainability to what Agastya stated, this is something now sustainable margin that we are eyeing at.
So if I understand correctly, so going forward, my mix of order book, so my product profile and the kind of orders that I have will going forward dictate my margins broadly. In some quarters, it would be like I would execute higher margin products. In some quarters, it would be like more bulk based orders. But on a broad basis, sustainable 15% kind of PAT margins is the guidance.
Certainly, yes. So might be the case that first half we may have just an example, like last March, what happened because of this tariff uncertainty. A lot of US customers, we could have, just an example, we might have gone to 170, 175 as well. But then because of this tariff uncertainty, some of them pushed it till they get a clarity. And some of them, they were you can ship well in advance because they don't have clarity on what exactly the tariff would be. So I'm just giving a layman language understanding example. Don't take it on a exact basis, but this is how it would go. So if you see on year and half yearly basis, this margins are something that are sustainable.
And sir, coming to the product mix, so box build would typically be an end-to-end kind of a solution. So typically it would have higher margins. Is that understanding right?
You are muted, Mukesh.
Yes. No, so you are right. End-to-end product has a very higher margin. And that's also another reason also some have, we predicted this time that this product should go in market first versus, automotive or other product goes in the market. So that's where it's not easy to predict our mix is still, smaller value, is that correct? When we are 1,000 crore, then it's 5 crore, 10 crore, 25 or 100 crore order will not much difference. Right now, it will imbalance because, we are still at 300 crore, 200 crore, whatever Sneh said number, that level we are right now. So that's why, maybe one more year, you will see this little bit, up and down. But once we go that higher range, next year or year after, you will not see that much fluctuation. But one thing we assure, I think, this margin is will be, PAT will be sustainable for sure. Yes. Maybe Sneh, you want to add something more onto this? That's what I would like to add.
Sure. Last thing to add on is if you see, as I stated before as well, this new financial year, probably it is going to be more dominated by box build as compared to last year. So you probably, again, you might not see that significant rise in first half of the year, but second half of the year, to what visibility we have, that will be a significant rise in box build solutions or a complete product box build.
Okay. And my last question on tariffs, sir. So currently, what are the tariffs on your Indian manufacturing? And going forward, how do you see situation evolving? Are there any industry talks with the government? What are the kind of typical in percentage terms we are expecting an impact on the business, and how much of it would be neutralized by additional orders coming from China +1 kind of a strategy?
So I'll start a little bit, Sneh, and then you can add on this. So currently, EMS business, we are working with our customers and preparing them. We are in a service business, so our direct business current order will not affect at all for. So in EMS business, the tariff impact or any other impact goes next year because we already have an order book. Let's say it was approximately 200 crore plus. So that's already booked. Is that correct? So we won't see that much different on this current financial year. So we are preparing though our customer how to find a solution. Let's say they are buying we are only sending one customer only PC board assembly and they are buying metal from China. So we give them solution. Why don't you buy metal from us also? So wherever PC board you are paying 10% extra, so we'll help you to mitigate, relieve some of the stress and from bringing from China versus India. So one of the customer we did about 70 different part number we just developed last only 2 months, I believe. Is correct, Gerald? In the last 2 months, we develop those parts and we give the solution to our customer. So we give them a balanced solution to mitigate. Yes, we are talking with our IPC association. We are in a constant touch with our, all these related bodies, and then we are trying to figure it out how, we can make it. That also another reason you can see our last quarter, last 3 months, quarter four, we had a spike in the, push, like the government, April 2nd was a tariff. So give me. So that's another reason why we have so much AR, So that was the question was, one of the question came up. So why you have an imbalanced number or, so that's why we had to push our shipment also. We did ship a lot of things before even end of the year. So that's why. But again, yes, we are working with mitigating the tariff. We are also working, helping customers to find another solution. Some customers we are getting China. So they are looking, and as I said, we have almost 800 crore new inquiries floated in last just 1.5 months. 800 crore worth of business inquiries right now. And those of you not even any forecasted or not even counted anywhere in this discussion today.
Also, I would say like India is in sweet spot as of now with this tariff situation, because now everyone is eyeing at China plus one strategy, where like they are eyeing at India because Southeast Asian countries also now they are well aware, and they are also going to face much more tariff than us. So I would say India is in sweet spot as of now, and we already have started leveraging that by signing up 3 agreement for design that we stated before. So that the design probably it might not have revenue for this year, but then it is going to help us out because one project we are signed exclusivity with the customer, where once we develop their product, they are bound to take for with AIMTRON in next 6 years of time frame. So that is a one China plus one or tariff strategy itself.
In parallel, also we are doing Indian business too. So local business means Indian other MNCs. And so that's also we are growing right now, and that is our dream too. Parallelly we can grow both business.
Thank you, Sridhar. I would request participants to please limit your questions to 2 since there are many in queue. Deepak Podar, you can please unmute and ask a question.
Yeah, am I audible?
Yes.
Okay, great. Thank you very much for this opportunity. So just first up, just a clarification. I mean, you mentioned our 500 basis point drop in our PAT margin on a half basis is largely due to the mix and match of different sectors in terms of revenue, and there's nothing to do anything with the pricing pressure or anything else, right?
Yes, it has nothing to do with like profit margin pressure, but it is because of mix and match. Like we are still in a phase where like we just ensure that 25-30% is something that is getting contributed by each sector, and like diversification is something that we are eyeing at. And just an example, we added like 2-3 sectors last year. Still this year we are going to add 2 more sectors. So that is how like we are eyeing at. So it will be a baggage of mix and match.
Understand. And given your box build revenue mix will go higher, there would be upward bias on these margins. I mean, as we go ahead, right?
Margins, I would say like these margins are sustainable one. So this is something that sustainable margins will continue for this year as well, because there is going to be a contribution of box build more this year as compared again. then don't start comparing with the first half of the year. Wait for this complete financial year, because that box build activities will start from second half probably. And to what we committed last year as well, last financial year, we are going to add one more shift probably after Q1, somewhere around in Q2, and that is going to help us out to increase our productivity and efficiency to help us to meet our numbers.
And when you say sustainable, we are talking about 16% PAT margin. That's the
Yeah.
number we are talking. Okay.
Yeah.
Understood. So this another question is on receivables. I mean, why our receivables is so high? I mean, it was around 40 days as of FY24. Currently, it is close to about 200 days.
Yeah. So if you see this data was as on 31st March, and just an example I'm giving again, to whatever it shipped in January or Feb, probably we'll start receiving, or we have already started receiving that funds in this month. So once anything is shipped to their end site or customer, once goods reaches the destination, post that couple of customers we have the payment terms. So once we ship it to US, after that they receive it. Once they do the IQC or quality check, after that they will start the payment cycle. So that's the prime reason. I don't think so that is something to worry, because we have started because this data is on 31st March and we have started receiving. If I talk about as on today, then we have started receiving the funds, and this receivables have gone down significantly.
But the payment cycle with US is generally how much? 2 months, 3 months?
Again, depends from customer to customer, order type, order base. So there are several factors affiliated with that. Again, just an example, like Denher Group, they have standard payment terms of say 75 days. So for AIMTRON, they might not change it. They are global suppliers. They have a global their own process. So they will not. We have to accommodate in their system. So we do accommodate that somewhere around in the pricing structure itself. So I believe that is something that we take care prior to sharing the quotes only.
And just one final clarification, the 800 to 900 crores of RFQ that we saw, how much conversion we are expecting in how much month?
Question, I would say, yeah, Mukesh.
I think if it is, so this is something we'll give you in a one quarterly update. This time maybe in a quarterly update we can give you, may not we give you a quarterly result, but quarterly update we will give you that little bit more up to that mark information that has raised the question also, request also. So normally this kind of customers, again, as I said, we are still 150 crore, is that correct? And next year maybe still, let's see, whatever 280, what's next age number plus numbers, whatever we have. But let's say one customer comes, as today, this last customer came is 128 crore, just one customer. So it's going to be imbalance everything. So giving a ratio is not a right approach, but I would like to give you some heads up. As a thumb rule, 20 to 40% is a winning ratio we have on an average. Again, one customer, big customer we win, then it's going to be even one quotes, maybe a 10 million quotes is going to imbalance. If I say, okay, our winning ratio is 50%, then it's going to be imbalance. So, but you can just a thumb rule, 20 to 40%, you can see is the winning ratio. Normally in this EMS industries, around 20% global, everybody's winning ratio is there. Every single EMS supplier.
That's very helpful. I think that would be it from my side. And all the very best to you. Thank you so much.
Thank you, Deepak. We'll take the next question from Manan Madlani. Manan, you can go ahead, please.
Yeah, hi sir, thanks for the opportunity. My question again is regarding the margins only. So when I compare H1 to H2, the breakup that you have given, so major change that happened is in industrial. So last H1 it was 56% of overall revenue, and this half it's goes down to 36%. That's the major change I can see. Along with that, our box build share has increased from 20% to 27% and end-to-end from 2% to 4% broadly. So despite our box build, segment share gone up, why the margins are lower?
So, as Manan stated before as well, again, it's a mix and match of sectors. Industrial, no down, but if you see that there are other sectors that has grown, like IoT, if you see, then if you compare year on year or first half of the year to second half of the year, that has grown. And there are a couple of other sectors in a similar way out. So again, this year also, like contribution of Boxwell is going to be much more as compared to last year. And to what margins are been there, it is going to be sustainable for this new financial year as well.
Okay, let me put it differently. So, Mukesh, you always mentioned that medtech and defense and all these segments have higher margins, right? So, if we compare last half to this half, their share has increased. So, why the margins decreased instead of increasing from what we achieved in first half?
So in medtech also, there is a different kind of product, is that correct? So one of the sensor product we make in a medtech, it's a smaller box. So it's category wise, I think a little bit offsetting the way, but as Sneh said, we will sustain a minimum, as I think we are in a still range. Last time also we said 16 plus minus 2. So if you see, when you go, we have a little pressure raising the team, adding infrastructure, getting, whole setup going on. So there is a lot of things going on. So maybe the first year you can see a little same way, but within 1 year it will be stabilize everything. And after 1 year, you will see a standard, some standard about AIMTRON that this is the margin business, we're going to take it. Right now, what happens, let's see, in a 200 crore business, 250 crore business, there is one order was telecommunications. The correct last year was 38 crore or something. So part of the shipment goes out, it will imbalance the margin also, even though that's a box, it's a correct router. But router has a maybe 15% margin. I'm not sure exactly, I don't have a number. Versus defense at maybe 22% margin. So it's going to be balanced out. But it's again, as I said, I'm totally transparent and not fabricating anything. It's a kind of a nature of EMS business that it's very hard, to go compare by line. So in short, yes, we're going to make sure that we do not want to take some business less than certain percentage, and that's what we will make sure, and we will not take those. But we will sustain the margin, whatever we promised so far, and we'll keep it that way.
Okay. And this 15 crore capex we are doing in the US subsidiary, what would be the purpose of that? And in this 189 crore order book, is there any order from that subsidiary as of now?
We are expecting, and we already have one of the contract. We said 3 contracts we have, all 3 foreign contracts, and those are the customer. They do not want to come, directly to India, and those are the customer. We do not want to also go through AIMTRON Corporation. So that is the reason we are, we created that subsidiaries. Those orders not in our order books because we have just a contract. Contract means we signed the MSA, Master Service Agreement, and we got the POs for the only for the tooling parts. So let's say one customer gave us a PO for $180,000, just the plastic mold tooling. The whole project is totally 23 years about, it's going to be at 20,000 per month. It's going to be around $10 to $12 million business. So, but we do not count unless we got the PO in our hand, we don't count in that. So that's why. But yes, those AIMTRON, Electronics LLC through, we will do definitely, sizable business. Last time we already said about 50 crore, 50 crore, 5 million to 50 crore range. And we're going to do plus this time. And we already now seeing even more opportunity that could be double or triple. We don't know yet, but we'll definitely give you some range.
No, so this 25 CR, is this going to spend on the manufacturing side or what?
Over there, those 25 CR is just we took an Omni approval, so it's not required right now. Right now, we don't need money there at this point. But we are also looking at, as we had our last time question, what is your M&A strategy? And so we prepare ourselves. Let's see something happen and we get a maybe, they are thinking about there might be a recession effect comes in US, and we can find a good company also, we can pick up that under AIMTRON Electronics LLC. So we would like to keep prepare for that, so we don't have to go right away board meeting and get approval and everything. So that's why we don't need that money right now. It is just an approval right now. But in future, yes, that money will go as a if we're going to do something, we're going to do as a either part of M&A or part of capex to start some manufacturing. Let's say customer insists us and say, okay, we have to have under AIMTRON Electronics presence over here, and then we're going to give you a 10 million worth of contract. Then might be at that time we have to use that money. But at this point, we don't have any other extra expense other than we hire a sales office in Texas, and that's what we have right now.
Okay. And what sort of hiring we did in H2, and what's the plan for next year, full year?
Snehbhai, that's a good question for you.
So in terms of number, I think would check and keep you posted with business updates, I would say. But there has been rise in number of employee. If you talk about first half and second half and year on year, I know the next question coming up would be in terms of why expenses are less as compared to last year. But the reason for that is we have changed the heads of and bifurcation. And to what first question we stated, we'll share the business updates on what heads we have added up new and where exactly the changes has been accommodated. So that will be taken care of.
No, I'm not worrying about number. I just want absolute number of employee addition for H2 and for next year, given we are going to add the second shift as well. So that's the purpose of my question.
H2 as of now was probably around 200, and this year certainly it's going to rise, it's going to increase. But as of now, we'll don't have the exact numbers, but we can keep you posted on that.
Okay. And our tax rate has been falling year on year. So can you guide us, like what would be the tax rate going forward?
Nikita?
Yes, it will be 24% corporate tax.
Okay. And just last question, how much of the total raw material we are?
As of now, we are planning to have 80% of the raw material. So it's in line still.
Outside India.
Outside India. So still we are working on that.
No, for currently, how much of the total raw material we are procuring outside India? That's what I'm asking.
Okay. So if you say as of now, you can say 70% and above, it is getting procured from out of India. 30% is local, like bare PCB and other specific mechanical parts. Apart from that, if you talk about electronics, we still have dependency on global footprints. So because unless we have a full-fledged ecosystem over here, we might not be able to convert that ecosystem across India. So you can say 70% approximately is getting catered or imported from out of India business.
And out of that import, how much is it from China or Vietnam or any other tariff sort of risk having country?
Like if you say China, probably it would be less than I would say 50-40% less than that. Vietnam, we don't deal with them directly, but then anything is there like it's China, Hong Kong, Singapore, Malaysia, Thailand, and such kind of countries. Vietnam, there ain't anything.
Okay. I'll join back in the queue.
Thank you, Manan.
Thank you.
We'll take the next question from Mr. Nilesh Jain, and I would request participants, please limit yourself to 2 questions, since many are in queue as of now.
Hi, am I audible?
Yes.
Yes, Nilesh.
Yeah. So I had a question on your current order book which you all have, and given the industry classification which you all have given, so I see the share of automobile to increase to almost 20%, and for the FY 25, automobile share was around 6%. So how do you see margins? Because you said it's going to be sustainable around 16%, and at the EBITDA level, it's going to be 19%. Because we understand automobile usually has low teens margin. So how do you see that's going to impact your overall or margins for next year? And
So this customer is actually, there is two type of automobiles. There is a BMS, like a battery management solution. Those are also it's not very low margin though. Like LED lightings or something, tail light, headlight, those are the very low margin business. So the one we have right now, the customer is and that customer has a very good margin because we are doing a main controller board for that. Sneh, you want to add something on this one? Why, automotive is increasing and margins still stay same?
Certainly, I think to what Mukesh stated, that is one part of it. Another part, or if you see another side of it, we have capacity utilization available. So as of now, we are working one shift and we are planning to add like one more shift. So that is something also that is going to help us out, because if you see that revenue is going to increase on that front, and that is how, like, just an example, anyhow, like capex has already been there, and we like internally have one thumb rule that one assembly line, three shift can generate around 100 crore worth of business. So considering that, we can increase the ROCE ratios, and just ensure that whatever PAT is there, it's sustainable on that front.
okay, my second question is bookkeeping data. So out of your FY25 revenue, how much is from the AIMTRON US and AIMTRON the group companies?
I believe it's less than 20%.
Okay, so rest is all you're saying it's directly from the India business and
Yeah.
okay, only 20% you're saying, okay. And how should we look at the cash flows? Because there has been a sudden drop in cash flows. Obviously, they're led by impact by working capital. But how should we look at it from the next year point of view?
Yeah,
So
very
yeah.
Okay, go ahead, Sneha.
So I believe I stated before, like, this data is as on 31st March. So whatever receivables were there, we have started receiving the receivables, and significantly of that, like you can say 50% or above has already been received. So there won't be any significant challenge on working capital side, because if you see, as of now, we are a zero debt, and probably to what we are eyeing at, we are very strong on that front. So what we shipped on first quarter, we have started receiving that. And certainly, like last 2 months, where something like because at last month significantly because of this tariff situation, we need to ship a lot of business. We show a lot of products. That is where the significant rise has been. But I think this is something this month we have started receiving the funds, so there won't be any challenge on that.
I mean, so on the payable side, because that is also gone up a lot. So do you think that is going to come down to our average 20, 30 days?
Orders head of it, we have to start getting the material, right?
That's right. No, but okay.
So if we don't have the material, how we are going to build it, and how we are going to ship it, and how we are going to get the payment?
Yeah,
I understand.
605. 605, Vinayji, let's take very short and sweet questions. So we
Okay.
Yeah,
Thank you, Nilesh.
thank you.
Yeah. So we'll take the next question from Mr. Manish. Manish, you can unmute and go ahead, please. Manish, you can unmute and ask a question. I think is
Yeah.
he's
Sorry. Yeah, congratulations on an excellent set of numbers. My question is, what is the percentage of revenues you receive from US customers? And let's say, Trump has said that there will be separate tariffs on semiconductors. So if that is applied, then probably even if India makes, trade deal with US, there is a possibility that this separate tariffs on semiconductors will be an addition to on top of the trade deal in case if India achieves that. So in that scenario, what would be the impact on the company?
Okay, to start a reverse way out, if we see, so we are into PCB assembly and box build assembly. So even though they do start something on semiconductor side, if it's specific to PCBA or if it's specific to complete box build, then that is something we are going to get impacted. Still, it's they have kept on hold as of now, and trade deal is as of now ongoing between both the countries, and the negotiation phase is ongoing. So once we have a clarity on that, then it is something we can give you more heads up on that front. But as of now, like with this tariff situation to what it has come across, India is the like in one of the lowest country where like in terms of tariff percentage, if you see. So and it's in a like sweet spot stage, whereas compare if you compare with any other Southeast Asian countries where EMS has been to this 10 times, 100 times to what India EMS as in sector is. And even if you see to what government is promoting as of now, so government of India has also started some of the schemes and some of the incentive schemes, PLIs and all that. Also, even government of India for defense, they have started they have restructured their revised target for specific to defense. And by FY 2030, they are eyeing at 500 billion in terms of revenue just from the EMS sector. So if they are eyeing at 500 billion, then this is a Niti Aayog report. It's not from some specific private source. It's from Niti Aayog itself. So they are eyeing at 500 billion by FY 30. So I think we have a significant opportunity coming up down the line. And coming to your first question, the contribution of US in second half of the year was somewhere around 36 to 37%. That is including North America as well as USA.
Okay, thank you. My last question is there any impact in case if China completely stops their rare earth supply? Will there be any impact?
I don't see the impact because when COVID started, everybody used to with COVID, is that correct? So there will be a temporary impact, all over the globe, but it's going to be back up like a hockey stick. It's going to be some back. So at this point at EMS, or at least 1 year, we don't see direct impact. But let's see if it goes after 1 year and stays something longer between China, US, I think everybody's going to solve the problem. That's what everybody's seeing. Maybe 26% versus 13%, or maybe 18%, or maybe 10%. But it will be resolved pretty soon. That's what we are hoping.
Okay, yeah, thank you.
All right.
Thank you, Manish.
Thank you, Manish. We'll take the next question from Arun Ramakani. Arun, you can unmute and ask the question, please. Hello, Arun.
Hey, yes.
Yeah,
So my
audible.
question was, so since we are facing a unique situation where a lot of opportunities are coming for China plus one, is the current capacity is enough for scaling up, or do you see
Yes.
that we need to scale up to an extent?
So current capacity, we are ready for 500 crore right now, as of today. And we already announced that before previous call also. So our current capacity without maybe minor capex, let's see, one tools here and there, if 5-10 crore, but we don't need any more. We have enough infrastructure, enough building, enough real estate our own, enough, zero debt. So everything is in place to spike to even if Snake can bring 400 crore, we can build it. Is that correct, Jairam? Yes. I hope I answered the question, Arun.
Yeah, yes. So one of my follow-up question was, provide we have an exceptional situation where do you see in case of any supply chain disruption from countries like China or any East Asian countries, do you have a strategy in place to overcome such challenges in terms of raw material procurement?
So only PC board is a China monopoly. There is some electronic component, but China is going to throw the other countries. I think China already started, building relations with Thailand and other countries, and they already started, putting their infrastructures, companies and branches and everything. So China will always find a way around, and people will also find around a way. So I don't see a very serious problem that way. Yes, maybe it will be impact 5-10% extra logistic here and there, one place to another place. So right now, let's see. I should not say in publicly, but one of my customers said, in front of us, can you bring, PC board from India to here? Do some assembly over there and bring it over here, because they also looking something like that. So everybody wants to, get a better pricing and better, way out. So at this point, it's kind of a man-made, problem. So there is a solution. If it's a natural disaster, then it's very hard to find a solution like COVID. But this is a man-made problem, is it correct? This problem is made by two men, So it's kind of a political problem. It's kind of so that's why in our last meeting, in our, this kind of association meeting, we discussed that also point. Yeah, somebody will have to pay a little bit extra. On an average, 4 to 5% extra goes to end user or customers, direct customer like me and you will pay extra, but there is a solution. So it's not like an unsolvable problem. I hope I answered, Roji.
Yeah, thank you.
Right.
I think I'm good with my questions. Best of luck for AIMTRON to grow a lot.
We are
Thank you,
ready for
Arun.
you.
Thank you, Arun. We'll take the next question from Mr. Manoj. Manoj, you can go ahead, please.
Thank you, Vinay. Hi, Mukesh. Hello, am I audible?
Yeah, you're audible.
Yeah, I'd just like to ask Mukesh, that things now are different. I mean, previously he said that the long-term plan for AIMTRON is to fold AIMTRON Corporation into AIMTRON Electronics. So now with the tariff situation, are you facing some clients who say that no, we don't want to work with India, we just want everything made in the USA?
As I said, this is still too early to even predict anything. Tomorrow morning, this man has a good sleep and he's going to change something different. So I'm just, because in my country also, because, I'm just trying to,
Correct.
again, yes, I don't see that issue right now. Still, we have the same plan. And that is the reason we create a AIMTRON Electronics LLC in the US. We are still moving forward with the same previous understanding that, before I retired, I would like to put under one umbrella. And maybe something comes totally weird, we'll give you some heads up. But I don't see that, without India, whole world cannot survive. Without China, whole world cannot survive. They have to find a way out. So it's my strong statement, but they will find a way out. Let's put that way. They will find a way out and they'll find a solution.
Is there an internal target for you all to just incrementally shift that AIMTRON Corporation to AIMTRON India? I mean, a certain percentage per year? Okay.
We started the business moving to, AIMTRON Electronics LLC, and maybe we can surprise you and bring those 3-4 customers right away, and we'll see. But we already started the process.
So is it possible that by the time we shift to the main board, everything is under AIMTRON Electronics India?
That's too early to say. But we should have something bigger. That's our goal, is to have, Sneh, and my dream is to have some kind of a new, what you call, Sneh, a new
benchmark as an SME company before it goes to main board.
Correct. Yeah. So my next question is to Sneh.
Manoj, Manoj, you have to
a
limit
final
the question because there are a lot of participants.
No, I just asked one question only till now. Just a final question to Sneh. So I just wanted to ask him about the second and the third shift. So I believe if the second and third shift come on, our margins will also get squeezed as the product profile will be different. Is that correct?
Just to give you one example on a practical basis. Just an example, say like first shift to as of now to what we are working has 25% as an PAT. I'm giving you a rough example. Don't take it into any calculations. Similarly, you say like second shift you started working, and you have like say 10% as an or 15% as an PAT. So if you average it out, it is going to be still the same margin to what we are going to make it out. And if you see, then overheads are getting splitted up, and capex is the same. So then revenue to what scalability we are eyeing at. So with that same kind of margin, it's something that is still we are assured that in this call also before that we are going to have this sustainable margin, and we'll just ensure that ROC goes up with the equipments that we already have in minor capex here and there, five significant one to reach the milestone of 450 to 500.
All right. Thank you so much. Thank you. That's all from
Thank you, Manoj. Thank you, Manoj. We'll take the next question from Ravi Gupta. Ravi, you can unmute and go ahead, please.
Hello, is my voice audible?
Yes.
Yes.
Firstly, congratulations on very good set of numbers. As a shareholder, I feel very happy to see this year-on-year growth in the slowdown phase. Just two small questions. First, do we have any fundraising plan in the upcoming, like not upcoming this financial year, 25-26?
So at this point, it's too hard to say, but we have a lot of opportunities. We try to, see if there is a right opportunity, we can maybe get something lined up. If there is a recession in the US, let's see, for example, and we find a good opportunity, then we can jump onto that and we can come to go to fundraising and then get the funds. Also, kind of a fundraising also, we also thought that in the past, but we are still, we need to show, let's say, I said 280 plus is the correct number for this current year. So let us prove that also one more time, because this time we prove it is correct. So we cross 150, we gave it around 150, we cross 150. Let's say 300, and then I think we go to market and get the fundraising without showing any result. I think it's going market also is not the right approach to get justified also. And if no need, then no need is correct. Why we take the money or why we borrow money if no need? And that's what I learned from my farm, my home village. My parents, I say, don't take a loan, don't take money from bank. So there is something in our culture also. But with that said, we are not rigid, we are flexible. We have a well-known companies approach us here. Thanks to Vinayji also, we have a very good IR team, and they are also ready to put money in us, bank money on us also. But right now we working both way, keep our relationship open, working with them, meeting with them, and finding the right opportunity to put together all together.
Okay, understood. So my question was primarily on like equity side. Debt is like separate for fundraising part, but I think for equity also you have similar thoughts that if situation arise, then only we would like to raise. Otherwise, we are comfortable and firstly focusing on delivering 280. Is my understanding correct?
Correct.
Okay.
You want to
second-
add something? Sneh, you want to add something? I'm okay with that.
No, I think we are perfectly okay as of now with our rollovers that are going on APR ratios and all. And in case if we go anything on inorganic front, then still we have open our debt as an option available. So equity is precious to dilute. So we are still like too early, I would say, to have fundraising and all that.
Why I said Sneh, you want to add? Because we just came out management KPI meeting today. We had just finished at 4 o'clock today. And he actually normally, chairman don't have to do anything, but they give me a KPI for 100 crores. So bring some M&A activity. So that's why I put Sneh on the spot. But anyway, continue.
Okay,
Thank
and
you, Ravi.
sorry, I only one
Yeah,
question
go
I
ahead.
asked. Yeah. So my second and last question will be, what are the projections for like top line for FY 27 and 28?
So next year, like we are eyeing it as of now 280 plus. Let's keep with that number first. And once we prove on that, definitely I think we are not going to go anywhere. So post that we can help you out with future projections. We do have 3 years plan, but as of now to keep you posted as per like guidelines, next year we are eyeing at more than 270, 280 plus.
Also, I think there's a lot of uncertainty in the right now situation is uncertain. So, but our promise is to until certain level we'll stay in that 50, 60, 70%, CAGR. So that is our standard right now, and we stay plus minus 15 plus, 15 plus, not minus on 15.
So Mukesh, within 1 year, they have changed us from 40, 50% to 60, 70% CAGR growth.
No, I think 60, whatever you gave the number 280 plus, that means it's 60, 70, isn't it?
No, agreed. But I'm talking about the community from their end. That from
So-
already they made us to talk on more than 40, 50% plus now.
Anyway, but I think let's take a next question.
Thank you.
Thank you,
Thank you,
Ravi.
Ravi.
We'll take the next question from Pratik Chaudhary. Pratik, you can unmute and go ahead, please.
So congratulations, and I just have a bookkeeping question. Out of this 100 crore that we build in the second half, how much did we do? If you can bifurcate between Q3 and Q4.
Sorry, if you can reframe the question.
Out of the 100
I think
crore,
it's Pratikji, it might be around 50-50, but we'll give you exact number if you need it. So question is Q3 and Q4, what was the revenue? But I think Q4 was slightly higher than Q3 because whole EMS, at least AIMTRON EMS side. Q1 is little lowest, around 35%. Q2 is around 40%. Q4 is around 50-55, and Q4 around 50 to 60% range. So I think that's where we have, if you look at the last 3 years. So, but we can exact number if you need. We can look at later on.
Okay, sir. Thanks.
Thank you, Pratik.
Thank you, Pratik. We'll take the next question again from Pratik Bagadia. Pratik, you can go ahead, please.
Yeah, hi guys. Thanks for giving me this opportunity. All my questions are answered, so I won't repeat those questions. Just one suggestion from my end, that since we are giving results once in 6 months, is there a way where we can give some updates every quarter, maybe through a press release or something where you can share about the business operations and how things are progressing? Because what happens is 6 months is a very long time for a retail investors to get access to informations. And in such times,
Yes.
there are a lot of rumors starts to float on social media and in different circles. So if every 3 months or maybe something in between, if you can come up with some press release or some updates about the companies, the operations and how things are going, it would be very, very helpful for, a lot of investors.
It's a good suggestion. And, we already promised Agastya ji. And the first question was same. I think we already, we'll do some kind of press release, if possible, as soon as, our goal is actually have a quarterly result because when we go to main board, we have to do that practice anyway. So hopefully next year, we had 2 years, most of all the documentations, contract with, our internal auditor and everybody is kind of a 6-month way. But we already started that process. Our advisory CA, Divekant Zaveri also told us that we should go for quarterly result, and we are in agreement also. So but before that also we'd like to make sure our ducks in the row. So we would try to put all this, all this documentation process, financial process. We are as per the street requirement, and that's what we are learning right now and putting the right team in right place. That's what we are doing right now.
Yeah, I completely understand because, coming up with quarterly results will have a lot of documentations and rules and regulations to follow. But till time we get to that process, even if a small press release about the business operations would be very helpful for a lot of investors because that will keep rumors aside. That's
We are
what I'm
not
saying.
worried about the quarterly result or documentation process because we would love to do a documentation process, and that's the reason, we would like to go for it. But this first 2 years, like, internal auditor and all those people, we had decided that we're going to go first 2 years half yearly. But yes, we will do a press release or a business update for sure.
Thanks a lot.
Thank you, Pratik. We'll take one last question from Mr. Giri. Giri, you can unmute and go ahead, please.
Yeah. Hi, Mukesh and Sneh. Okay, great job done. 2 questions. The first one would be way forward. What kind of a geography-wise revenue mix roadmap that you guys plan to position yourself? Currently, I think India is about 65%. Rest of the world is 35% with 31% from US and few other countries. So where do we plan to, position ourselves? And
Sure,
of the
sure.
800 crore inquiry that you have, right, what kind of a geography mix that we have in place?
So again, as I said in a previous answer in previous question, when you have a 300 crore revenue, it's very hard to give you some kind of estimate. I hope I'm clarifying or I'm communicating. Maybe Nirmal or maybe Snake can also can add later on, because the one order from one big order comes from one place, it's going to be imbalance everything. But yes, our goal is to stay, international MNC, and it's going to be around 70-80%. That's what we said previously. That means 50%, let's say we have Indian business, but out of 50%, 20% maybe local Indian companies and 30% maybe Indian, international MNCs, like, Schneider or maybe ABB or maybe another international companies, Honeywell. Those are the companies we would like to focus. So that is our always, way out that way. Also, we are trying to, newer opportunity, we are trying to focus more through international in US or North American business. Still, even though this tariff situation, 10% paying tariff, still my customer saying is bringing from India is a lot cheaper than bringing from any other countries. So I think other than China, we are the winner. If this situation stays longer with China and US, then India will be the winner, because even 10% tariff, they will be happy to cope up with that. So I
Got
hope I
it.
understand. Thank
Got
you.
it. Last question. Mr. Mukesh, can you reflect on the 25 crore, electronic component scheme that Ministry of Finance has passed, right, related to the sub-assembly of PCBs, right? How are we going to harness this scheme?
I didn't follow, Sneh.
So we are evaluating on 3-4 prospects as of now. One is the PLI that has been recently released by Government of India. This is the second one that you stated. So probably like this evaluation is ongoing, and probably before end of this month we have some fruits on that. We are internally discussing with some experts in with LCNA and couple of like ESC and couple of other electronics body. Post our discussion, we'll have some fruits on that front. So I would say like within more a week to 10 days time, we'll have some updates on it.
Got it. Okay. Thank you, guys.
Right. Thank you. Due to paucity of time, that was the last question for the day. Mukesh ji and Sneh, would you like to give any closing comment before we end this conference call?
I think I would like to say thank you to everyone also. Just like, one thing we learned today is we will make sure that press release is required. Interim results is required. Hopefully, is a quarterly financial is possible as soon as possible. So we put it in place. One thing is sure that we are ready to go, main board, and we are excited to go main board. So for that also, then we can also justify our, one lot of questions comes over, how are you going to combine all the business and all these things. So we are ready for that. And in parallel, we are also in expansion mode. At this time, it's too early to stay, but there is as I said, is a $500 billion worth of opportunities in India itself from other international MNC and local Indian companies. So there is a lot of opportunities we have so will be a lot of expansion opportunities also. Parallelly, we are working with our advisory board, and then once something comes up, we'll let you know. Opportunity for AIMTRON is more, but we are more kind of as I said also last time, our goal is to go one step at a time. We don't want to rush too far and tip off. Even though we rushed this time and we learned a little bit, it should have a couple days more, and then we could have a better understanding, better result. But that's what we are learning right now. With that said, again, thank you so much, everybody, and maybe anytime, any questions, please send it to cs@aimtron.com, and we'll go from there.
Thank you. Thank you to the management team for giving us their time. Thank you to all the participants for joining us on the call. This brings us to the end of today's conference call. You